And since all of this SaaSpocalypse drama started, have you changed at all how you investing in the new companies?
No, I mean, I think, look, so SaaS is not the, so for every PE firm says all deal flow is proprietary, right? So let's just first agree that that's not true, right? So hopefully you have a thesis, or a hypothesis, right? So we tend to not, like, if some deal book comes over the transom in an industry we don't know, it'd be hard for us to any private equity firm to do it, because it's like, I don't know the industry, I don't know the historical multiples, I don't know how efficiency. Hopefully, as a private equity firm, that's why it's great to be in the lower middle market, because I can have a niche, smaller founder-owned software companies, and there are a ton of those businesses out there, right? If I'm a KKR, there aren't too many billion-dollar businesses I can buy, right? So it becomes more complex at the high end of the market. It's so much easier at the low end. So hopefully you have a hypothesis. So for us, I wouldn't want to be at our size. I wouldn't want to be buying a bunch of companies in one industry, right? Because, like, let's say the restaurant business or something, like, we do have to be careful about what our end customer concentration is, not just our customers, because that can really affect the market if you're not careful, right? So, for us, I think that becomes the part of the real puzzle is, are we hunting in industries we know? There's always portfolio management. So if you feel like, we got some, we took a little bit of risk on these early ones, we got some rewrites going on, maybe we should pick something that's more cash flow. So you're always doing portfolio management, right? Just to make sure that you're managing your risk profile the same. But I think if you're hoping that a deal comes over the transom, or you're going to use AI to find some great company that doesn't exist, that the AI engine it's not, right? That's not going to be the case. I think we believe that smaller focused funds are the way we want to do it. And it's just one way to do it. There are plenty of ways to make money in all these businesses. But one, for us, we like this market. And two, it's emotionally satisfying to give founders a lifetime exit. You're giving some founder $50 million. That's life-changing money for their family. And money they couldn't get anywhere else. They can't go public. No tech company is going to buy them for them. They're all sort of startup stuff. Some large conglomerate has trouble buying them because they would just kill the patient, right? And most of the time they don't want to sell it to the large guy, because that's the guy they were competing with for years. Like, they don't want to sell it to him right now. Once they've sold to us and 4 years go by and they're on their boat, they don't care who we sell to at that point, right? But in the beginning they do, right? So it's a different model when you're in niches. Now, plenty of people focus on just the niches, and some of these niches are big. We don't do healthcare, but isn't that we wouldn't do healthcare? It's not an area of focus for us, but there are some funds that do nothing but healthcare software companies. That's a really big universe. It's a niche, but it's a huge niche. So you can go crazy. If you look at us, most of our portfolio companies are, you make the face, like the RCA dog face, like, wow, the company does that? That's interesting. There's a lot of these small businesses you just never even heard of, which is, so for us, it becomes a natural way to be not concentrated, because they're kind of all over the map in terms of what they do, right? I mean, you look at our portfolio, I'd say we've got everybody from, aircraft maintenance software companies to video editing technology to, auction software, you name it. We're kind of in all the buckets. Which means I change hats. Like, wait, are you the guys that have the auctions, or you guys?
That's good. It keeps it interesting. Do you think everyone's become an AI guru overnight?
Do I think that people think they have? 100%, right? Yeah. Like, you get sold, like we get. So first of all, this is let me get you this sort of public tip for people, right? If your name is Bob Jones and you got laid off and now you want to be a consultant in AI, don't name the company Bob Jones Incorporated, Bob or Jones Consulting, Bob Jones. Just like call it something else, Stargazer, whatever. Make it look bigger, right? This is right in the sweet spot of when mobile development became key, right? Everybody was looking for mobile developers, and everybody, they taught themselves mobile the week before they were selling it to you. So is everybody acting like an AI group? They are. Are they an AI group? No. Most of them are not. And this thing is changing so rapidly that we had these changes too. People forget, like, the different versions of browsers, the different mobile operating systems. We made a lot of mistakes in that thing too, right? People forget that because it's kind of consolidated down to a winner's platform. That's why we're in the, like, I am hands-on in code bases. My partner Paul is hands-on in sales and marketing. Why? Because I can't provide advice and counsel on something I don't know how to do, right? This is new. So we're doing it ourselves, like literally banging away on stuff. So I think that's really important in the AI world. Is you need to touch it. This is for better or for worse. This is radically changed the software business, which is always awesome. Like, it's so fun when an industry gets disrupted. Like, it's way more fun. It is, because you don't know what's going to happen. It's way more interesting.